Meet Mark.
Meet Ashley.
Mark is at the GRA to submit a tax return,
while Ashley is using the new Optimal software to submit her return electronically.
Optimal Revenue Management System. Let's get ready for 2021.
Withholding tax takes on many forms. There is withholding tax for residents and non-residents, and individuals and companies, all of which have varying rates for each category. Learn about this and more in this week's Talk Tax. Welcome, I'm Nikisha Castello, and let's talk tax. The tax withheld is the income tax of a person or company receiving the payment, and not the tax on a person or company making the payment, and not withholding the tax. For residents, a person must be residing in Guyana permanently, live in Guyana for 183 days in a year, or intend to reside here permanently except for temporary absences. In the case of a company, the control and management of the business must be in Guyana. Therefore, if a branch is registered in Guyana and have a subsidiary incorporated in Guyana, but is managed and controlled outside of Guyana, they are not residents of Guyana. That is for residents. But what about non-residents? Non-residents earning income in or deriving income from Guyana are required to pay tax on such income, since on many occasions, if not deducted at the source, it may not be paid. Consequently, the person or company contracting the non-resident company to do a job must act as an agent of the GRA and remit that tax along with a withholding tax form specifying the nature of payment, amount, and amount withheld.
That's ridiculous.
Excuse me? What?
This
Who's
guy.
talking?
Smartmouth over here.
Smartmouth. What's your name?
Come on.
Hold on there, big fella. Payers are subject to remit the amounts withheld within 30 days to the GRA. This is to ensure that the tax from non-residents are paid. The person making the withholding tax must issue to the recipient a statement or certificate showing the gross amount of payment, the amount of tax withheld, and the amount actually paid. %20 on the gross payment of interest earned on savings accounts held at commercial banks or financial institutions, 20% on the gross payment of interest earned on loans secured by bonds and similar instruments, 20% on discounts earned on treasury bills, and 2% on payments in excess of $500,000 to a contractor for the supply of labor or for hiring equipment, excluding VAT. %20 for gross distribution, also known as dividends, and gross payments. The gross payments subject to withholding tax are interest on any debt, mortgage or other security, rentals, royalties, management charges, or the provision of personal services and technical managerial skills, premiums, commissions, fees, and licenses, discounts, annuities, and other annual or periodic payments. The United Kingdom, Canada, and CARICOM countries have signed treaties or contracts to prevent residents from paying tax twice on the same income and taxed in another country. The treaty allows for the imposition of a reduced tax rate in some cases. In other countries, the rate is 20%. So, let us get into an example. Company A is a non-resident company incorporated in Canada. It has a branch in Guyana and performs drilling services for Company B. It declared chargeable profits earned in Guyana as $20 million for year of assessment 2019 and paid corporation tax of $6 million, bought land for $5 million, invested $3 million in the government of Guyana's treasury bills with a 6-month maturity date, and spent $1.5 million to replace office equipment. To determine the withholding tax, we select the chargeable income, $20 million, minus the corporation tax, $6 million, and the acquisition of the land, $5 million. That would give us deemed distribution at $9 million. The withholding tax rate, which is 15% for Canada, will be multiplied by the deemed distribution, giving us a total of $1,500,000 $350,000 withholding tax. The replacement of fixed assets and securities, that is, treasury bills, with a maturity period of less than 30 months are not an allowable deduction as reinvestments. That's all we have for Talk Tax this week. For more information, visit our website and social media channels. I'm Nikisha Castello. See you next time.